Before we get started, this video is for educational purposes only and is not financial or investment advice. Trading carries significant risk, and past performance does not guarantee future results. Always do your own research before making financial decisions and trade responsibly. QTX Algo Systems is not responsible for any financial losses. Here we go, such an easy trade from yesterday on Bitcoin. I am going to explain in depth why this was easy and what to look for to replicate trades like this. With a blank chart, there was no way to have any edge. The secret to trading well is multiple confluences all agreeing with each other. Let's go through all the steps together. First, you need important levels. We will start with monthly levels. These will be the highest close or open of the range. Ideally, you would want naked levels, meaning they have not been touched yet. That ensures that limit orders are sitting on them and have not been executed. These monthly levels have all been tapped, so they are not naked, but they are still good levels to mark down. Next, we will find our weekly levels. Again, none are naked, but still good levels to mark down. You can already see that the monthly and weekly levels are very close together. Finally, we find our daily levels. I do prefer naked daily levels only, so you'll see those are all that I have marked on the chart. We will now do a Fibonacci retracement from the previous major low to major high. Again, we would like the levels to be naked or untouched, so we know there are orders waiting there. That is why I have removed the golden pocket or 61.8% retrace level. It was already tapped previously. Next step is on the 4-hour chart, identifying highs and lows that would have liquidity resting above or below them. This is where you can get swing failure patterns, or SFP as I will call them. Lastly, for levels in this scenario is the session volume profile or periodic volume profile set to 1 day. This finds the highest volume traded on a particular day, along with the value area high and value area low. The highest volume level is called the point of control, or POC as I will call it. In the image, you can see the lowest POC which was untapped, or naked, so it is a naked POC or NPOC. This was also the day of the last major crash and the massive liquidation event, so the volume from that day is even more important. Now, with all those levels marked, we go back to the 30-minute chart, and there are multiple levels all in the same area. That is a confluent level, but that is not enough to enter a trade. Next, we add in the Statistically Extreme Areas by QTX Algo Systems. The white color flashes first as the initial low warning, then blue is even more extreme, and green flashes when a reversal from a statistically extreme low area occurs. This indicator combines the information from several different factors and generates the colors based on statistically relevant information. The yellow signals you see on the chart are statistically extreme warnings on the top side, similar to the white color, but white is for lows. They are warnings of extremes being reached. We can later discuss how to use the yellow color for exiting the position. Next, we have the stochastic momentum by QTX Algo Systems, which crosses above its EMA. This shows a change in momentum to the upside. This indicator is good to use as confirmation of a possible low or high, as long as several other confluences also point to the same direction. It should never be used alone. Last confluence is the order flow. Order flow is extremely important to make the final decision. First, we have the order flow from Binance, the Bitcoin Tether pair. On the 30-minute candle we are interested in, it shows 86 million negative delta. Delta is the difference between market buys and market sells. So in this case, there were 86 million more market sells than market buys. Since price was not able to break the area with that many market sells, it shows that there must have been an immense amount of limit orders there to absorb the market sells. There was an open interest increase, which shows new shorts opening at the low. Open interest is the net longs plus net shorts, so a positive increase in net positions. Due to there being a significant amount of negative delta, it can be inferred that the open interest increase was due to new shorts opening. Next order flow is from Bybit, the Bitcoin US dollar pair. It shows 17 million negative delta and an open interest increase of 22 million, so clearly new shorts opening at the low with the potential of being trapped. Trapped shorts means the shorts that opened at the low will have to close if price moves against them, or even be liquidated. This creates a strong move upwards, as there can be a short squeeze. With all this information and confluence, it becomes quite a simple entry. Decision. Knowing when to exit might be even more important, so like and subscribe for that information coming next, and to know when our indicators will be available. If you have any questions about this educational information, don't hesitate to contact us. We will be providing a plethora of information going forward, along with our advanced indicators which can help determine if there is enough confluence to execute on your plan. Our website is almost live, so be sure to check it out. The information is in our page description. Finally, this video is for educational purposes only and is not financial or investment advice. Trading and investing involves significant risk, and past performance does not guarantee future results. No indicator or strategy can predict the market with certainty. Always conduct your own research before making financial decisions. QTX Algo Systems is not responsible for any financial losses. Trade at your own risk.